YouTube, what it do? Lil Petty back with another stock market episode. Alright, you guys, in this episode, we're going to be going over credit spreads. We're going to be talking about what's going on in the market. I'm going to be showing you guys some options plays. We got 1,000% play. We got a lot to talk about in this episode. Stay tuned. For everybody that knows and follows me, knows that I was out of town. I just got back a few days ago. I didn't update the website today, but I have been staying on top of it. Now, in this episode, we're going to be talking about credit spreads, selling Amazon credit spreads for passive income. We also got 1,000% play. We're going to be talking about we got our 1,000% plays. We got earnings. So we got volatile stocks. We're going to be going over all that in this episode. So without further ado, let's get into it. All right, so first off, what you guys see on my screen is we have the S&P 500 /ES futures. This is the future market, and as you can see, SPY is coming up, and it is about to break all-time highs. So we are keeping that on watch. We have been on this uptrend. Stocks are going up still. The trend is your friend until the very end. Now, if we look into this closely, we can see that earnings season is coming up. Today, we had basically a parabolic day on the index. I'm going to zoom into the 1 minute. As you can see, we had this massive uptrend, consolidated, and it looks like we're going to push up tomorrow for another leg up to break this all-time high on SPY. Now, we're going to zoom in, and we're going to get into some options, and I want to talk about the credit spread that we have going on with the Amazon. Now, as you can see, if you guys follow my videos, I've already talked about the blown up account. I've refunded this account, and now I have a strategy that I want to break down with you guys, and it's basically taking advantage of the options premium, selling Amazon credit spreads on Mondays. Now, I'm going to show you guys what is a credit spread. Let's go over what a credit spread is. So basically, what a credit spread is you come to the options chain and you're going to sell one contract out the money, and then you're going to buy one contract out the money. Now, this forms a spread. You're selling this one and you're buying this one. Now, if the stock plays out in your favor, so right here, this would be selling a put spread. So we are hoping that Amazon goes up. As long as Amazon does not come down to this price, then you will be able to collect this premium right here, which is the spread. So the in-between these are the spread. That's the premium. You need a margin account to make these trades. So how do we set up the strategy? Now, the strategy is basically we're looking for a pop of 75 to 80. And I'm going to show you how we set up the trade. I set up the trade on Monday. I've already closed out the trade. I want to show you guys right here. So look, we bought a 1785 and we sold a 1792 on Monday. We got filled. We got a credit of $2.11. So when you get the credit, it goes straight into your account. You can't use the money until you either close it out or the contracts go worthless. So let's get back to the chart, to the options chain real quick, and I want to explain it to you. Now, when Amazon right now is trading at 1922. So the way you can set this up, if you have Tastyworks, you can set up a short call vertical. So when you're selling a call, you want the price of the stock to go up. So you would sell it out the money, and then you would put one on top. Now, the reason you do this is to limit your risk, and it's also for smaller accounts. So if you were just to come and sell this credit spread, if you were just to sell it naked, you would need you would need $100,000 account to collect this $36, this $3,000. Now, if you have a smaller account, you're gonna put a credit spread on it, and it's also to manage risk. So you could put this credit spread right here. Now your max loss is 174, and you will receive a credit of $100. Now that's saying if these two contracts go worthless at expiration, 3 days till expiration. Now the strategy is to keep the pop in 75 to 80%. So we're gonna scroll down. So if we were to set up this play right now, this is the area we would be looking at. Now so this is 1860. Now we're gonna go to Amazon chart because I want to show you guys something. Okay, so we come to Amazon chart and we look. So the past 2 days it had a run up. It's been on a little uptrend for the past couple days, slowed down, and now it got the pop. So if we were to sell Amazon 1860 puts with the credit spread, you can even move this out to make the spread wider to collect more, but you're gonna need more. So you can really just play around with this. But like we said, so we're going for 75% pop. As you can see, this trade right here would net you $200 as long as Amazon does not come down to this 1860 by expiration. So we come to the chart and we look, Amazon 1860. So Amazon would have to hold this range in the next 3 days for you to collect this $200 profit. Now let's get back to my trade that we talked about. We got the $200 credit. So we're gonna go to that trade. That was the 1792s and the 1785s. So we sold the 1782s. 17. So this was the trade right here. Now, when I set the trade up, it was yesterday, and I sold the contracts down here. I sold the vertical. Somebody picked it up, and then as you can see, the stock went up. It uptrended. Now, this is not gonna basically work like that all the time because we don't know that Amazon's gonna make this parabolic move. Now, my credit spread was still down in the 1780s. So I'm basically playing that, and when I set it up, it was a 75% pop. So the trade was basically saying Amazon wouldn't come down to this area right here by the time of expiration. So I sold the contracts, and you're basically just managing the trade. So if Amazon was to start downtrending, we would stop out before those contracts got into the money. Because if it did get into the money and then it did go against you, that's when you would see the bigger loss. So this is a way that we're going to be taking advantage of selling vertical spreads on Amazon. Why are we targeting Amazon? Amazon contracts are always expensive on Mondays. That is a known given. So yeah, we're basically just going to be looking to. Now, let me get back to this because Amazon is on an uptrend. Now, you don't want to sell against the trend. And it's earnings season. So, with Amazon running up into earnings, I didn't want to sell a credit call because if Amazon went up, then the contracts that I would have sold, they would have been getting close to being into the money. And when you're selling credit spreads, you do not want your contracts to get in the money. So I'm going to show you an example. If we were going to sell a call on Amazon right now, we would come over here and we would look for the 75% pop. Boom. Now, and then I would go maybe even spread it out one more time. So this is $130 max profit. You need $367 to execute this trade. So if Amazon was to get past this, then now that's when you're going to start seeing your max loss you're going to start losing money. So that's kind of what you want to avoid. If Amazon does run up and then they start coming back down, you're okay because this is where you don't want your contracts to get hit in the money. And that's why we are going far out the money to make these types of trades. So, back to my trade. We sold the 1792s and we put a credit spread and we closed it out today and we left $54 on the table. So we ended up making $160 in basically one day off the Amazon credit. Now, we're going to be looking to set up some more of these Amazon trades, but as of right now, I'm going to just chill and probably wait till Monday for when the contracts do get a little bit more expensive. And as you can see, we are in earnings season and Amazon reports on Thursday. That's why I did not hold the contracts until expiration, because I do not want to be playing in the earnings season. So that was a deep detailed of my credit spread trades. The Amazon, that's talking about basically just trying to what is it? Basically just trying to have passive income trading, and we're trying to get this blown up account back on track so we can basically have our margin account and yes, sell credit spreads. And credit spreads it's a safer way of trading, and we're basically just taking putting the probabilities and taking advantage of the time premium with options. So that is the strategy with the credit spreads. And yes, so now let's get into the 1000% options trade. Twitter. Yes. So Twitter reported earnings today. Let's pull up the contracts real quick. This is what we're gonna do. So as you can see right here, we have the Twitter chain right here. We have the chart of Twitter, what it did today, and this is gonna be the option price of Twitter. So Twitter reported earnings, and the stock sent the stock up. So the stock was on an uptrend. It consolidated at $40, pulled back. This might have another leg up tomorrow, so Twitter could be on the watch list. I would watch out for it. We did not make a trade on it today. We did miss it, but Twitter had 1000% options trade. I'm going to show you the contracts. The contracts today were the $40 calls, and they ended up opening up today around 14 cents. They shot all the way up to $1.30. They've consolidated back down to $60, and these are the weekly contract call options on Twitter. I'm going to show you guys percentages. So yes, that was 800% move on the options trade on Twitter. Now, we are going to also talk about what I've been trading. So, I've been playing SPX. And I want to talk about why I've been playing SPX. Where is the options at? There we go. Okay, so SPX options. My strategy with the SPX options is I'm not playing dailies, and if I'm gonna play it, they're gonna be 2 day or 3 days or 4 day contracts. I'm not playing 1 days, and I'm not playing 8 days. So I'm playing 1 to 4 day options on SPX. SPX is the index for the SP 500. Now, with earnings season, a lot of stocks are reporting earnings. So I'm not trying to trade the options, because if you look, for instance, Tesla reports earnings. IV is very high, so contracts are going to be very expensive. It costs $1,000 to hold a 265 call on Tesla. That is ridiculous. So what I'm going to be doing, I'm going to be trading SPX, SPY contracts, mainly SPX because of the volatility and its bigger contracts. But I'm going to be trading those because Teslas, the Amazons, all the big stocks, IV is high because of earnings. So I'm not going to be trading those because it doesn't make sense to me. So let's go to SPX, and I want to show you a huge move today on SPX, and show you why I see value in trading SPX. So this move today, the contracts went all the way. The stock went crazy today. I'm gonna zoom out real quick and show you guys the 5-day. So the stock has been trending this way. We finally got the pop, coming and approaching all-time highs. So we're gonna show you the contracts that I ended up trading. I'm gonna show you guys right here. So this was my trade today. One day, I bought this 29.20 contract for $9.40 and sold it for $11. I'm gonna show you 29.20, and these contracts ended up going all the way to $20. So we bought these contracts right around here, and then we ended up selling them right around here. So I was being very conservative. I took my profit, and as you can see, I left a lot more on the table. But I turned around in this account and I bought some SPY calls, and I want to show you which ones I end up buying. SPY. So these ones right here, I bought these 29.30s, and I ended up paying 17 cents for them. Now they're trading around 60 cents. These contracts went all the way up to 70. I'm looking to close them out tomorrow. Hopefully we get the all-time high break, and I will close out this contract. So this contract went from $17. Now it's trading at $60. I'm hoping that we can close it out for a little bit over $1. And I went out for 3 more days and bought the 293s. I bought these for 51 cents, and now they're trading at $1. So that's gonna do it for this episode. It was a 15-minute episode. I kept pretty much everything detailed. I wanted to show you guys what was going on, giving you guys an update, letting you know I'm still here. I'm still trading stocks. Options are going nowhere. The stock market is on fire. And yeah, so Lil Petty, we out of here. Y'all have a good rest of the day.